Good morning, Charles and the rest of the world. This is the Pirate Traders Morning Show, bringing you news of the day. For starts, we've had unemployment claims this morning, which came on exactly as forecast, so probably not going to move the market with that. Perhaps some news over the rest of the day. Mainly, we've got Jackson Hole going on today and tomorrow, and then over the weekend as well. So, but mainly unemployment claims came in flat with no surprises. So that's good news. At least it's news. The futures are trading flat overnight. Gold and silver is slightly diverged from one another. Oil continues to, let's see, it's been going down. Yeah, it's continuing to drift down slightly overall. It's up this morning. Then if we get back to Europe, Europe is flat pretty much as you would expect in August. And when we look at the Asian markets, they're kind of a little bit bubbly here and there. Hang Seng is up slightly. Nikkei is also up slightly. I think it's drifting up to 39,000 overall, as I mentioned previously. So other than that, that's what's going on trading wise. News wise, I go to Deutsche World and not much going on there. We're not a political show, and we feel like when there's political things going on, unless they're actually going to move the market, there's not really a lot for us to discuss because we're really just market focused. And other than that, I couldn't find much else. Everybody's a little bit interested in what's going on in Ukraine. Um, Frankly, though, day to day, it's dang, it's a war, which is unfortunate, but it's certainly going on day to day. It's not stopped. And for people who are focused on that part of the world, it's quite interesting. Looking at Al Jazeera, also about the same thing. The situation in Gaza's life is always top of their list of things to report on. And they also are pretty good about reporting in Russia. They'll report on both sides of the Ukrainian and Russian conflict. So they'll take a, I don't know, fair to say balanced view, but they'll take a view of what both sides, how both sides are feeling about what's going on in the conflict. When I move over to Reuters, it's also not a lot going on except for Jackson Hole. And what we're thinking about is, at Jackson Hole, it's where the policymakers show up and talk about what they're really talking about, when they get to see each other in person. And while they'll be submitting paperwork to each other, I think it's more about them having a direct relationship with other bankers around the world. Plus, it's quite nice. I've been to Jackson Hole, or I've been to Grand Teton, which is where Jackson Hole is. Went there in 1988, as a matter of fact, with my mother. Been a while back. So, the interest rate announcement yesterday, FOMC minutes came in and were forecasting a price cut, an interest rate cut in September. Reuters is saying that the interest rate is cooked in a 25 basis point cut in September that's already baked in, and a 1/3 chance of a 50% of a 50 or half a point cut in September. So they'll see if they want to do that. But what's interesting to me is that they're feeling like they're projecting 2.22% cut overall by the end of 2025. And that would take 10-year treasury yields down to 1.6%. That's pretty impressive because that would mean mortgages would be back under prime mortgages would be under 5% for sure, and maybe close to 4% for a prime mortgage. So that would really make a big impact on how the market's going to, how people would buy homes, how they would buy housing. If they can pull this off, they'll have quite a bit of economic activity going on. And I would point out that you've got a dollar downtrend on the back of that. And this is straight out of economic theory that if the interest rates are dropped in the US, investors will make less interest. So there'll be less demand for the dollar. So the dollar will weaken. And that's just straight old. That's the how it's supposed to work part of it, of how what's going to happen there. And with that, the only other thing I was going to muse about, well, I may just chat about it with Charles. I was chatting with Charles when we started. So, Charles, if you're there, you can tell us about the market.
I'm here. I made
Charles
it.
is here. Yay.
Okay. So, yeah, just real quick on the news front, you can lower your screen share if you'd like. The main focus today is going to be Jackson Hole. There's going to be a lot happening. There's a lot of meetings. There's a lot of conversations happening. At any point, I've learned this in the past from previous Jackson Holes. That sounded strange. But anyway, I've learned this in the past that anything can happen. You can kind of get sporadic little moves throughout the day. My assumption is we are going to have another choppy, sideways, boring day like we've had pretty much for the last, 2 weeks. I have a feeling we're going to have another one of those days, probably make another new high, but then go nowhere the rest of the day. If something happens at Jackson Hole, if a conversation takes place and news spreads and people start selling off assets or whatever, anything could happen at any moment. But I have a feeling it's going to be boring until 10 a.m. tomorrow when the larger economy is watching what Powell says. But let's jump into the charts real quick. All right. So first things first, what happened yesterday? We always want to start with what happened the previous day to give us a sign of what could happen the next day. Well, it's a continuation of what's been happening. The market has been doing this slow melt to the upside for the last almost 2 weeks. And basically what that means is it goes sideways intraday for the most part. Obviously, there'll be little trends intraday, but for the most part, it's going sideways intraday while it is slowly but surely creeping higher on a daily time frame. I've been talking about this a lot lately, but it is worth repeating. That momentum is weaning here at the highs. Okay. The ranges are getting tighter, both for the regular trading hours. The last two ranges were a little bit tighter. The overnight ranges have been very, very tight, but there is no reason to assume we can't continue the momentum higher. Yesterday, I was thinking we might roll over because the overnight didn't make new highs, which it has been doing every single day throughout this move. The overnight's been making new highs. Yesterday was the first time it didn't, but what ended up happening? The market got a look above and fail of the previous day's range, liquidated, and brought in new buyers. So that momentum has started once again with those stronger hands stepping in yesterday, and the slow melt to the upside continues. So I suspect we're going to get something very, very similar here today. In terms of targets to the upside, the first target will be testing the overnight high at 56.58. Then we'll be looking for some resistance around 56.66. Dun, dun, dun. And then looking for a gap fill from an old gap. Or sorry, that's the bottom of the gap. So looking to re-enter that previous gap at 56.73. Now, we may just poke in there and then the market runs out of steam. We may just poke into that previous gap and then the market runs out of steam. That seems more likely to me as a scenario for today, if we get up there. But there is always the chance when you enter an old gap, the market immediately starts to head up to fill that gap very quickly. So that area around 56.73 will be a great area to pay close attention to what's happening with the market. Selling there would be bearish for the market to pull back. New buying would be very bullish for a potential move of short covering back up to 56.90. Okay, but like I said, all in all, I imagine today is going to look like the last few days, and we're probably just going to go sideways like this all day long.
Charles, I wanted to ask you, or just chat with you about what's going on in the overnight. And I mean, these are basically fully funded traders. They don't have the reduced margins to trade on. So these are big boy people who accumulate or sell overnight. And we're every day focused on, getting above or below the overnight high and low. I mean, who are these people? What are they trying to do? Because they're obviously waiting on us to they're waiting on the market to go above the high so they can sell out, or at least they're swing trading. But what are your thoughts on what these people are, what are they doing? What does that segment of the market doing?
Yeah.
Because I think
So
it's different from our daily, from the intraday.
it is an interesting topic. I'm glad you brought it up. Yeah. So overnight traders, obviously, there's all sorts of different people. It's a big, big world. It's a big, big economy. Some people are reacting to news things in their own country. So, say they're trading in Germany, or they're trading in Australia, or they're trading in Asia, or London, or whatever. They've got their own stuff going on, and they are buying and selling their own stocks and their own stock market indexes. And all of that is tied together. That's the thing. Everything is tied. I always think about it like a spider web. Like, there's little connections that are linking like everything together. For the entire world's economy. So if they're buying, something in Germany, or they're buying something in Asia, or they're buying something in Australia, it will cause things to change through arbitrage with the US markets as well. So there's a little bit of that happening. But then there's also, like you say, speculators, deep pocketed institutional speculators in every country, and they all speculate on the US market. The US market is the most liquid market on earth. It is the easiest market to move money in and out of. So if you're looking to get long or short and take profits a few hours later, and you want to do it with size, the US market is the place that you play. And so that is why our overnight markets get so much activity. And they're just short-term traders. They're like day traders. I would describe them more as swing traders, but they're like day traders. They're looking to take profits quick. So you brought up one thing that kind of really affects what happens with our markets first thing in the morning is basically a lot of times that overnight inventory is making a bet for what we're going to do. So this morning, as an example, our market closed right down here around 56.40 yesterday, but the overnight chopped for a while and has now taken the market higher. So that means the overnight inventory is net long. A majority of the participants are long. They have to be for the price to have moved up, right? If there was the same number of buyers and sellers, we'd be right back at yesterday's closing price. If there were more sellers, we'd be below. So more of the people that took trades between the close yesterday and right now are long the market. That means there's a lot of long inventory. Well, you have to be asking yourself, what are those traders thinking is going to happen? What are they targeting as a move to the upside? Well, they are thinking that the US stock market is going to go higher today. They are thinking that when they log into their computer tomorrow, the market is going to be higher, that the ES will have gone higher throughout the day today. So one activity that we pay a lot of attention to is what happens at an overnight high or an overnight low. Because if the overnight inventory is net long, and we in the regular trading hours push the market up to what is their overnight high, that is where a lot of them will take profits, because maybe they got long, in here. Maybe they got long in here. Maybe they got long in here. So by the time we get up above that overnight high, they're in the profits. They're feeling good. All of them. Every single overnight trader is winning. So that is a common place where the market will run out of steam and come right back down because we remove a bunch of buyers at that level. Now, the cool thing about overnight traders in a scenario like this is if we in the regular trading hours push up to that overnight high and we keep buying, new buyers from the regular trading hours step in, we'll keep pushing price up. They won't all take profits. Some of them will stay in, and that allows the market to keep going and going and going. What are your thoughts on those overnight traders?
I'm thinking, they are net long, but someone sold it. And so it's kind of there's still a balance there between people who either were exiting or people who, were I still see it as a bit of a chop in a way, where maybe people are honestly dollar cost averaging on a 23-hour scale. And the markets are going up and they're just keeping their eyes to get a piece of it all along. I agree, when the market's going up, that all sounds good, but I don't know. I'm wondering if these guys are taking a 24-hour view, or they're taking a 3-month view when they're looking at the markets, and they're just dollar cost averaging in and dollar cost averaging out. I mean, I'm not so sure that, because they're fully funded, I'm not so sure that they're as agile or as flighty as we day traders are.
Yeah. See, I would say, again, it's a little bit of everything, right? It's not like there's only one type of trader in the whole world who's doing one thing. But I can tell you, pay attention to that overnight high and that overnight low. In particular, in relation to the way the overnight inventory is. So if the overnight inventory, like today, that overnight inventory is net long, watch what happens to the market on days where the overnight inventory is net long. The market opens in the US and it starts going down. Watch how quickly it falls. Boom, 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 boom. As opposed to days where the overnight inventory is sort of neutral, where we kind of open around the same place we closed the previous day, and then the market starts going down. It won't go rapid fire down. It'll just kind of slowly melt lower. There is a huge difference between, when the overnight is net long or when the overnight is net short and when it is neutral. And there is also always, every day, something that happens at the overnight high or the overnight low. There is also an incredibly high probability we get to either the overnight high or the overnight low. I think all of that has to do with those overnight traders and where they put their orders to take profit, where they put their orders to enter new trades. Is there, long-term investment money in the overnight? Absolutely. I mean, there's a lot of very wealthy, powerful institutions all over the world that are investing in the market. But I think for my purposes as a day trader, I only think about the overnight as day traders because I can see the effect. I can see how the market reacts to whatever they've done. Like I said, today they're net long. So there's one of three things that will happen in relation to those overnight traders. Either we open, well, now it looks like we're going to open with a gap up. Either we open and immediately start to sell off, in which case I expect the sell-off to be fast and harsh because they're net long and they're going to be like, oh shit, get me out, get me out, get me out. And they're going to get squeezed. They got all their stops in here, right? Or the market pushes above, it goes up and it pushes above that overnight high and finds support, in which case it keeps going because they're not taking profits. Or it looks above and it fails and it pulls back in. Now, a look above and fail would move very differently than if the market opened and instantly started pushing lower. Because the look above and fail, we will have already taken out a lot of that overnight inventory. So I completely agree with you that, there's definitely people trading on a 24-hour clock. I mean, there's U.S. institutions that trade in the overnight. You know what I mean? If you listen to podcasts and stuff like that of big traders, a lot of them, if something starts happening in the overnight, they will get up out of bed and go sit down in front of a computer at 3:00 in the morning and enter trades if something's happening in London. You know what I mean?
Well, that's the other part of it as well. That's maybe another segment of those buyers and sellers is that that it is at 2 to 3 o'clock in the morning on the European Open and the London Open that the market will move and trend most likely with European markets at that time. So if you don't see it not so much on a TPO, but you do on a candlestick, if you run a 5 or 10 or a 15-minute candlestick, you'll see at 3 in the morning, something always happens.
Yeah, there's often reversals there. Reversals or beginning of trends. Yeah. Definitely. And another thing, if you split out your TPOs to show the different time zones, so if you split it out to see Asia's range and to see Europe's range, you can see Asia is always very tight, sort of rotational type of moves, stuff that looks like this, where they kind of go nowhere. And then generally, yeah, you're right. Once London steps in, it usually starts to be kind of where the momentum will pick up one way or the other, depending on what it's going to do. But again, that to me, I would worry more about those mechanics if I was trading during those hours, if I was entering and exiting trades. Or if you were living
in Europe, Charles.
Yeah, exactly. 100%. That's what I would be focused on is what's the difference between Asia and London Open and how did those traders react to the other traders and blah, blah, blah. But because I start trading at 9:30 in the morning, that's what I worry about is, what happened in relation to the close yesterday and the open today.
Cool.
Very interesting conversation. All right, guys. Well, we are going to call it quits there today. There's no requests for individual stocks in the chat, so nothing to look at there. As I said, I think it's going to be kind of a slow day for the market. There may be some sort of random little things that happen, little pops where the market, gets a little volatility for like 10 minutes based on pieces of news that come out of Jackson Hole and the arbitrage and the news bots that react to news. But generally speaking, I think it's going to be kind of a quiet day. I'm not really bearish, not really that bullish. It does look like we're going to open with a gap up. So anytime that happens, talking about that overnight inventory, if we open with a gap up, a lot of those overnight traders will wait for a gap fill before they'll get squeezed out of their trades. They'll have their stops for their longs, inside of our regular trading hours range. So if we get a gap and go, meaning the market opens and immediately starts to trade higher, that will likely create momentum and we keep going higher because we're not squeezing any of those overnight traders. Or if we come back down and fill the gap and we find support, at yesterday's high, same story. But if we start to pull back into yesterday's range, boom, 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 boom. We squeeze all those overnight traders and we get a pullback. Anything from you, Paul?
Not today.
No dad jokes to finish out the session?
Oh, man. If you got to have one, I'll give you one.
Do you have one off the top of your head? I'd love it.
I've always got one off the top of my head. Why can't your nose be 12 inches long?
Why?
Because then it would be a foot.
That was solid. That one got me a laugh out loud. All right, Paul. Have a good day, brother. Bye, everyone.